And the other side of it is all about risk. Those work because they're deferred out a few years. Well, that just goes without saying. If you want predictable income security, then yeah, then you're really flirting with the sequence of returns risk because Hey there, I am John Stevenson, the Guaranteed Retirement Guy, and I appreciate you for tuning in. Right behind me is a creek, and then a creek coming down into the creek that's like digging into the earth. I am hiking around the snow, it's melting, and just enjoying the winter while we still got it. I'm going to talk about the barbell strategy. Okay, using annuities with a barbell strategy allows you to have a lot of guarantees and have a lot of growth. Okay, so the barbell strategy is basically this. I mean, if you think about someone who's lifting weights, okay, they've got a big barbell over their head and they're doing presses. Okay, you got weight on each side. One side of that barbell is safe income strategies, it's guarantees, it's safety, against risk, things like that. And then the other side of it is all about risk. Okay, if you want to put money in real estate, maybe you want to do private placements, you want to just crazy stuff, maybe a new type of Bitcoin, right? I don't know. New startups can be risky. It's nice to be able to be in the stock market. Maybe you just want to keep some money in the S&P because you feel like the S&P is going to keep going well and you want to have some growth. It allows you to do that. So annuities, they serve as a safety anchor, okay? They're really there for providing for your healthcare, for your lifestyle needs. If you want to travel, that's lifestyle. Maybe for your grandkids, your kids, maybe you don't have kids, okay? It's nice to be able to have them, okay? They're there in the good times and the bad times. And if you look at my annuity calculators on johnstevenson.com, you'll see the payouts. They're really good. You can get sometimes, $50,000, $60,000, $70,000 from $500,000 in income, in a premium. And so go to my website, johnstevenson.com. You'll see the payouts. Go to the income rider. The income rider usually pays out the most annually. But beware, the top three or four options, like with Ameritas, American General Life, Nassau, a lot of times those are the accelerated payouts. They pay out more for the first 5 to 10 years, and then they are reduced for about 35 to 40%. And that is just because they're used for a purpose. They're used to basically bridge an income need in the beginning years. So, and you'll notice in a lot of my videos, I'm sharing, here's how $500,000 gave $65,000 a year in income. Here's how $1 million gave $160,000 in income. And those work because they're deferred out a few years. Or the age of the person is older. There's a lot of variables. Or maybe it's a single payout versus a joint. So there's a lot of cool things you can do with these annuity contracts. But that is one side of your barbell that you can use. You can set up for yourself. So what I like about this is it frees up the growth side. I love growth. And it's probably because I'm young. But when I'm older, I still want to do growth. I'd love to be in the stock market still when I'm older. And it frees up my money to be able to do that. So when the market is in the down in the dumps, I don't have to sell at the wrong time. Annuities make it possible so I don't have to. I've got my income coming in. I don't have to worry about it. All right, so another one is sequence of returns protection. I've talked about this in the past, but this can really derail your retirement planning. It really can. If you're trying to time the market, it never works. And if you're thinking, hey, I'm gonna get all this growth, and by the time 6 years rolls around, I'm going to retire, then you're really flirting with the sequence of returns risk because yes, you might have a few good years, but if you have one bad year, all of a sudden your retirement plans are thrown out the window. You either are retiring on way less income or you're not retiring at all. Okay, you're waiting another 5 years to retire because you're waiting for things to recover. You don't want to deal with that risk. It's not worth it. Okay, peace of mind for you and your spouse. Yes. Well, that just goes without saying. If you want predictable income security, then yeah, it's nice to have a side of your barbell that's giving you $100,000 in income and the other side that's giving you a ton of growth, or maybe not so much, exposing you to lots of risk, but you don't care because at some point it will recover and you're fine. Your lifestyle doesn't change because you got your guaranteed income coming from the other side of your barbell. The other thing I do like that these annuity options give you is they give you the option to have an income rider, okay? An income rider gives you lifetime income and it gives you the option to activate joint or single, whichever you see fit. There are some annuities where you have to activate the single or the joint right from the beginning, like you have to pick it, even though you might activate it later. That's usually like Nationwide or ClearSpring. There are certain companies that make you do that. But most of them, they will allow you to purchase, build up a lot of contractual guarantees for either a single or a joint payout. And then when you decide to take income, that's when you will elect the single or joint payout. So that's how those work. So that is the barbell strategy. Okay, one side you've got guarantees. Okay, money you can't outlive. You can live till you're 110 and the income keeps coming. Okay, well, the other side over here, you might have ETFs and stocks and crazy investments that you want to try out, that you want to stay invested, you want to build wealth, and then let that side grow. And during the down years, you don't have to sell. But when it goes back up, you're like, all right, take another 300 grand, buy another $30,000 in income. Okay, stack it over here. You've got your barbell side, your risk side, taking the risk, giving you the growth, and then giving you the ability to buy more income on the safe side over here when the timing's right. Anyways, I'm getting off my tree limb, getting off my soapbox. I'm gonna show you one more look at that. That's creek coming down. It's really carving it out pretty good. And it's just because the snow melt is happening like crazy right now. In fact, where I'm standing, it's gonna fill up here with snow, with water here shortly, because it's warming up pretty quick. So, but it's pretty. It's really pretty being out here. Literally, this whole area was covered in 10 feet of snow just 2 weeks ago. That's how fast it's melted. So, but then it just greens up real quick. It's just really pretty. So I hope you enjoy this. It's nice being out here. If you don't get around, you don't get to hike around, then hopefully you get to enjoy some of the places that I'm taking you. All right, if you are looking for an annuity payout, you're looking for the highest payout, and you're looking for something as a barbell strategy for using a portion of your assets, then go to my website, go to johnstevenson.com, check out the calculators, see what the payouts are, and then reach out to me. There is a link on my website right there to book a call. It'll be a Zoom meeting. We'll get on a call. I'll share my screen, and you'll see a lot of the options that hopefully you've already been researching, so it won't be a surprise. But now you'll have someone like me answering your questions and giving you advice, because I deal with over 70 carriers and thousands of indexes and hundreds of riders, and I'll tell you the best ones to get, depending on your situation, depending on if you want growth, if you want income, or both. Okay? Look at that. Look at that. Yeah. I never get tired of it. It is beautiful. So enjoy your retirement, okay? Use the barbell strategy. In my opinion, it's one of the greatest strategies you can use. You can set yourself up for a lot of guarantees, a lot of lifetime income, and still have the growth, not feel like you're missing out, because you're not, and be able to enjoy your money. It gets to the point where, are you going to continually grow your money forever for nothing, or are you going to enjoy it? And if you're going to enjoy it, in my opinion, annuity contracts are some of the best, because they'll give you withdrawal amounts, 7-8% sometimes more, that you would normally never ever take out of your own retirement account. But they're not designed for that. They're designed for income, for money you cannot outlive. You just can't put a value on that. So anyways, all right. Thanks for watching. I appreciate you. If you like the video, make sure you like, subscribe, share, comment below if you got questions, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.